This is my last weekly video of the year, and I want to end by looking at one stock symbol, a symbol that represents 2022, but also represents so much more. I like the idea of talking about the entire year with one symbol and then forecasting 2023 and what it means for the world stock market, for the US stock market, for the bond market, through the lens of one symbol. Now, that one symbol is Tesla, TSLA. We're going to look at that. It has so much going on. So let's just jump over to it right now. Here's the symbol right here. Just looking at this. So let's talk about the 12 points I want to make. So the first point I want to make is that 2019 is over. Now, why do I mention 2019? Because that was the year that trading became free. Now, this is pre-pandemic, right? So 2020 COVID had yet started. I know you can do the math, but in 2019, people really started trading stocks, day trading, option trading. Trading became absolutely insane because there was no longer the $4.95 barrier, which really isn't that much, but emotionally it was gigantic. So 2019 is over. The free trading thing, yes, it's going to keep going on, but what pushed an amazing amount of stocks higher? You can look at this price chart right here. Look at just 2020 right here. 2020 for Tesla was right there between the two blue lines, and you can see the big dip being 2020, the 2020 COVID. So the 2019, everything is free, option trading is free. It's really an end to 2019, and the COVID really gave it that extra boost that probably was never supposed to be there, but now stocks are returning to their pre-COVID high, as in a lot of them. I believe Tesla, there's a likelihood, almost a probability of Tesla returning to $60 a share. Now, why do I say that? I say that because that $60 is a very important price point. Right now, as I record this, it's market hours on Thursday, and Tesla's at, let's just say easy math, $120. So I think Tesla could get cut in half by here. Now, it doesn't actually matter whether it does or not. The reason I'm bringing this up is because right now the PE ratio of Tesla is about 38, and the S&P's PE ratio is about 19. So it's about half of that. At the beginning of the year, Tesla's PE ratio, and I have it pulled up here, Tesla's PE ratio at the beginning of the year, let's just look here, let's get its PE ratio at the beginning. 215. The PE ratio of Tesla at the beginning of the year was 215. Today being only 38 looks like a bargain. The problem is, what are people willing to pay for that $1 of earnings for Tesla in the future? Today, right now, they're willing to pay $38 for $1 of annual earnings from Tesla at the beginning of the year. People were willing to pay $215 for $1 of annual earnings. That's amazing. The way you want to think, or the way I think about earnings, is if a PE ratio is 38, that means it's going to take about 38 years to get your $1 back. So if Tesla falls to $60, it would only cost you $19 to get $1 of Tesla's annual earnings. And yes, earnings per shares are going up for Tesla, but people are not willing to pay as much for those earnings. That's why I think 2023, one of the big stories is going to be people willing or not willing to pay as much for that $1 of earnings. Right, we could see maybe a PE ratio on the S&P down to about 15, 14, 13. And if that's true, that people, in fact, are going to be willing to pay less and less for $1 of earnings, you're going to see Tesla fall with other massive stocks. Okay, so the first thing is why 2019 is over. It's because the kind of the free trading boom of craziness is over, and it shows it mostly on Tesla. The second thing, why public is almost always better than private. Okay, there are a lot of private funds out there. A private fund, an illiquid fund, a non-tradable fund. We talked about that with B-REIT. The great thing about publicly traded symbols is you can get out 1,000 times a day or back into it. It's public. There is price discovery going on with a non-tradable fund like BREIT, right? The Blackstone REIT, which most people call it BREIT. It is illiquid. It is non-tradable. No one really knows what it's worth. Now, it doesn't matter in a bull market. We're not in a bull market. We're in a bear market. In a bear market, these non-tradable, illiquid, non-public funds really get hit badly because everyone rushes to the exit. The problem is the exit is gated and you can only get your money back once a quarter or twice a year or yearly. And that means when someone is not allowed to get their money, all they want to do is get their money. So this is also kind of the ending year of these gated. Now, they're not going away, but 2023 is going to see a lot of pain for non-traded, non-public funds because people, all they're going to want is to get their money back. Okay, let's talk about the third one, which is reputation. That vertical line on the screen is the day that Elon Musk said he would buy Twitter. From that point, let's just look at what happened from that point to where the market is right now. So Tesla's down 65% from that point. That means it lost 2/3 of its value. For easy math, let's just call that $600 billion. Gone. That's gone. Okay, Twitter, he paid about $44 billion. Probably Twitter's worth about $4 billion today. So he lost $40 billion in the 44 he paid for Twitter, gone. That he lost that's an incredible amount of money, 40 billion gone. And Tesla lost about 600 billion. So right now, Elon paid about 640 billion for Twitter. That's how I kind of think about it. Now, the thing I want to point out here is really reputation. What he really lost was reputation. He lost his reputation, right? People are really now questioning more than ever his reputation. It is very hard to build reputation and incredibly easy to lose it. Okay, next, why most people buy stories and not stocks and don't even realize it. So look, the Tesla story was it was going to take over the world at, what did it peak at? I'm just guessing, $1.2 trillion market cap. Right now, the market cap is about $375 billion. People bought the story of Tesla. And going back to just looking at its earnings are going up. If you look at the middle screen here, its earnings for September 30th, the end of Q3, was $3.24. So its earnings are absolutely going higher and are positive. The problem is, again, what people are willing to pay for those earnings. And I believe in 2023, people are going to be willing to pay much less for $1 of earnings across all investments, including Tesla. People bought the story, and now the story has changed. Earnings matter. Okay, we talked about the PE ratio and why almost no one understands PE ratios and why a PE ratio is really what you're willing to pay for $1 of annual earnings. I think about Amazon. Like, I know I want to talk about 2023 through the lens of Tesla, but Amazon's still at an 80 PE ratio, 80. It could get cut to 40 and still be more than twice what the people are paying for the stock market. Amazon could get cut in half. Let's just quickly look at Amazon. Amazon is right at COVID low, down about 55%. It could lose another, Amazon's at an $850 billion market cap. It could go to $425 billion and it'd still have a PE ratio of about 40, which if Amazon falls in half again, probably the S&P is going to be selling for a 10 PE ratio and Amazon would still be 4 times what the market is. So again, a big theme of 2023 is going to be what people are willing to pay for $1 of earnings. Okay, next, margin call. When Tesla was absolutely getting crushed this month, and December's been a very painful month for Tesla. Let's just look alone for this month. The month's not over. We have one more day tomorrow. 40%. There is a margin call in there. Now, a margin call is when literally the margin desk takes over and starts selling shares. You don't get to decide. Literally, Morgan Stanley, JP Morgan, whoever is the margin desk at those large companies, they're selling shares. It is very likely it's going to come out that Morgan Stanley and JP Morgan, whoever was controlling or managing those shares on margin, they just went out and they just sold to cover their book to make sure that they were solvent. So it's very likely we're going to hear in the next couple days, the next couple hours, that margin calls all over the place were getting triggered. Would not surprise me if Elon was getting margin calls. Again, see reputation, see loss of reputation. When the richest person, he's no longer the richest person on the planet, but when the richest person on the planet is getting margin calls, things are probably not that good. Okay, another big thing is really just momentum versus the news. The news has completely changed, right, on the market and on Tesla, Amazon, Google. Fill in your price chart by the direction of the investment, not the news. When news can no longer take the price chart down, and I think of FXI, I did a video this year, not too long ago, about how I said China has bottomed. And I said when bad news, and I've often talked about when bad news cannot take down a price chart anymore. The news coming out of China is horrible right now. Sadly, hundreds of thousands, if not millions of people will die of COVID after a 3-year shutdown. I also think of the mental state of that country. There's 1.4 billion people in China, and they're basically locked in, welded in, literally locked. That's just not a metaphor. They were literally barricaded in, locked in their apartment for 3 years, and now they're being let out, and they will all get COVID. And China does not have the resources to manage those tens of millions of people who will get COVID. Expect to see countries all over the planet saying we're not allowing Chinese citizens into our country. That should start any time now. And China's just throwing up their arms saying, screw it, we'll just let nature take its course, which is another big theme of 2023. What's the true nature? What's the true price of the market without the manipulation, without a zero interest rate policy, without trillions of dollars being printed? We're going to find out. I think it's lower. Okay. This is really about Tesla again. Tesla was the extraordinary company, and it's becoming just another ordinary EV company. Mercedes is making electric, right? BMW is making electric. Volvo is saying they're going to make, I think, all electric by, I'm going from memory here, 2030, 2035. Everyone's doing electric vehicles now. It is not a extraordinary thing anymore. It is the ordinary thing, and Tesla has become just another ordinary stock, though with massive margin calls. And I still believe the worst of its price decline is in front of it still. I would not be surprised if it fell to $60, and I know I've said that already. Okay, we're rounding this up. Here's the thing, and this is a big thing of 2023. You can have your money grow at 4% risk-free. I don't even think we need the price chart anymore. So let me just get out of and just change this. The risk-free rate of return, like you can give the U.S. government now a 90-day treasury. You're getting about 4.3%. You can get a money market now. Your cash is now making 4%. We're going back to a world where risk-free is 4%. Imagine if you're 60, 70, or 80 years old and you just want to throw up your arms and say, I'm done. You can literally get cash right now. You can start to get CDs that are going to give you a guaranteed 4%. So what's the right price of the stock market, the world stock markets, not just the S&P, when the free rate of return is now 4% and not 0? I'm willing to bet prices of stocks have to go lower. Now, I don't know if 2023 is going to be a down year. It's very likely we could see the market falling maybe till June, right? Having the market lose another 20 or 25% and then bottom in the summer, and then maybe even end the year up 5%, right? So there'll be more pain in 2023, but whether it ends the year higher or lower, we're going to see more pain before the market ultimately possibly ends higher. Okay, just a couple more things. I talked about how nature cannot be held back, just with China trying to hold back nature in COVID. It can't happen. I think we'll look back in 10 or 20 years and go, they probably handled, I'm having a hard time speaking today, how China handled COVID was possibly the worst way ever. They will still have the deaths, and the mental, emotional instability of 3 years being locked down is going to have a decade-long effect on China. But I will still say China's stock market has probably already bottomed, because I don't care how bad the news is coming out of China, the stock market in China is not going lower. And I looked at FXI a minute ago. Okay. And I'll wrap it up with this one thing. A lot of people have been taught that they can hide in certain parts of the stock market. When the market is down 30, 40, 50%, there's no hiding in the stock market. Now look, we're rounding out the year. We only have one more trading day left. I know energy was the best sector of last year, and it's the best sector this year. Healthcare is about flat this year. So is utilities. If we do go out with, or actually start the year with kind of a clean out, there is going to be no place to hide in equities. But with a free rate of return being 4% or 4.3% in 90-day treasuries, people are going to start hiding in cash. And cash probably for the first part of the year. I'm just calling it cash because when you're a huge company, you don't buy US dollars, you buy 90-day treasuries. So that's what I have for everyone. I have kind of looking at 2022 through the lens of Tesla losing reputation, people wanting to get more for their dollar of earnings. That's probably going to be the biggest story of 2023, an earnings compression, right? Maybe earnings go up, maybe earnings go down. I actually think earnings go down the first 2 quarters of the year. But the bigger news is going to be people saying, wait a second, I'm not willing to pay $20 or $30, or in the case of Tesla, $38 for $1 of annual earnings. I want more from my money. That's going to be the big story of 23. Thank you so much for being in my world. Thank you for all the comments. They make a difference. All the likes, subscribing to the channel, all those little things make a difference on YouTube. And thank you for reading my emails. If you are not, I have a weekly email that goes along with this video. You can get it if you just email hello@fearlesswealth.com. That's it. Take care, and I'll see you in a week, and it'll be 2023. Okay, bye.